Hello, this is Sahura, and we'll be with you with the global economic outlook in the week ahead, which is going to be the week 46 of 2025. As always, let's first check what we had in the previous week, and then we can go forward and check week ahead. Previous week, we had several important events to review. First of all, it was bad PMI numbers, Purchasing Managers Index from most developed and developing economies, published for October, and we saw that mostly economies, they showed a little bit better activities in the service sector, which is, again, when we are talking about the service sector, it is one of the most biggest inflation problems as well, because in most economies, the higher inflation is because of the higher inflation in the service sector. Anyway, the service sector improved in the most economies. On the other hand, the manufacturing sector was not so good. In European economies and in the United Kingdom, it was better. We had some better improvement. In China and United States, it was not such a good numbers. I mean, it was not, what the market was expecting. On the other hand, we had the central bank's meetings. In Brazil, the central bank hold the interest rate at 15%. The same decision which we had in the United Kingdom as well. In the United Kingdom, also Bank of England held the interest rate at 4%. It was widely expected in the market, but as mentioned in the BOE meeting analysis time, when we had a video about that, I mentioned that the most important changes, it was on the number of the voters, as like more numbers voted for the rates cut than expected, which means that the central bank is somehow had a more dovish stance than hawkish, which supported the stocks markets in United Kingdom as well, at least for the short term. Anyway, we will talk about the United Kingdom, UK economy in the week ahead more. In Mexico, also, we had central bank meeting, which cut the interest rate by 25 basis points from 7.50% to 7.25%, as the inflation is somehow under control and economy in Mexico need more support. In the week ahead, it's not going to be such a big week. However, the most focus will be on government shutdown continues or ending finally, what's going on, the fate of the government shutdown in the United States, and the speeches. We're going to have too many speeches from most central banks. Bankers going to lead the economy in the week ahead. However, we should have a focus on the economic data, especially from China and the United Kingdom as well. And if the government shutdown in the United States ends before Wednesday, we're going to have the inflation numbers in the United States on Thursday as well. However, don't forget to follow the government shutdown news, as it's going to give us a more idea of what's going on in the market. In China, inflation is expected to stay remains unchanged that in October, but annually. But monthly, it's expected to increase by 0.1%. The producer price index also expected to fall only 2.2%, a little bit better than compared with the previous months, which fell by 2.3%. And that one also was better than 2.5% fall of July. On Tuesday, we will not have too many data, but in Asia, but in United Kingdom, we're going to have the labor market data, which is expected to unemployment rate increase from 4.8% to 4.9%. That was something that I told for the BOE. We will talk later. That was this number. Average earnings, including and excluding both bonuses, is expected to increase with the slower pace. Look. In September, it increased by 5%, and that's expected to increase by 4.9% in October, including the bonuses. Average earnings, excluding the bonuses, expected to increase by only 4.6%. That was 4.7% in the previous month. And if you compare with several months ago, it was around 6%. So, which means that the average earnings, including wages, including actually with the lower piece, and that can support the idea of expecting lower interest rates, lower inflation in the next months, which is right now around 3.8%, 4%, and that can support the central bank policymakers or BOE policymakers, MPC of BOE, Monetary Policy Committee, to cut their rates at least by 25 basis points in 2025 before year ends. In Tuesday, we're gonna have ZEW servers from United Kingdom, from Eurozone and Germany as well. And for both of them, we expect to see slightly better than expected. And when compared with the previous months, we can expect to see slightly better economic sentiment between the businesses and also between civilizations, civils as well, not just the businesses, between the private and the privacy as well. That's generally said that when looking at other data such as the PMI numbers, it says that finally probably Eurozone economy can, it passed already its worst condition, and now they are looking a little bit better condition, and probably we can have the last quarter in the better condition in Eurozone generally. That's the number says. How it can possible, it's a little bit hard, but generally we can probably say we're gonna have the less worst digits in the fourth quarter. Wednesday, the most important event, it will be the Federal Reserve meeting minutes of the previous meeting, which was like previous week, and in the week ahead, which is going to be after 2 weeks of the meeting, we will have its meeting minutes. That can give us a little bit better idea of what happened in the meeting. We know that we had some members that they voted for the rates cut, and we had some members that they voted for rates hike. So we have to wait and see what was this difference between the disappointing actually between disagreement. Sorry, what was this disagreement between the meeting members? So this meeting minutes will give us a better idea of what's going on. Most probably we will have like more hawkish sentence from the meeting minutes, and that can most probably support the US dollar and put the slightly more pressure on the stock markets. Thursday again, we're going to have industrial production, manufacturing production, and GDP numbers from United Kingdom, which is the most important data of the day. We are expecting to see again the industrial and manufacturing production both to slightly ease in the third quarter, in the September, in the last quarter. That can affect the third quarter as well in the September. And the GDP also is expected to stay flat in the third quarter with 0% quarterly, probably between 0% and 0.1% growth in quarterly. The market expecting slightly like better idea of 0.2%, but I do expect something like 0.0% or 0.1% like flat grow in the third quarter, or maximum 0.1% grow in the third quarter. The market is expecting 0.2%. I mean, that 0.1% is my personal idea. On the monthly scale in September also, probably GDP will be flat, same as the third quarter expectations. There are slight improvement. Again, if the government shutdown ends in the United States, on Thursday, we're going to have the CPI numbers as well from United States, where we are expecting to see 0.2 and 0.3% for headline and core consumer price index. But annually, both of them probably should be around 3% for CPI and core CPI. On Friday, we're going to have the retail sales and industrial production from China, which will be the most important numbers of the day. And we expect to see both of them to slightly weaker data compared with the previous one, saying that the Chinese economy, looking at other data, also like import export, we can say that the Chinese economy will be slightly under pressure in October. Yeah, that's the most important numbers and digits for the week ahead. Let's go and check the charts. Looking at the charts, we can understand that still the market risk is still high with the VIX. There you go. With the VIX at 19.70, we can say that the market risk is still high. There is a higher risk in the market, and this higher risk can increase the demand for the safe havens, including the US dollar index and other markets. The dollar index still above 99. It's trading at around 99.30, just like in last days, we saw the dollar index at 100.20 as well. But generally, The dollar index slightly eased at the last days on Thursday and Friday, but now in a bigger picture, we can say it's still between about 98 and 99 marks can move forward. We have a very strong support at 98, and if the dollar index fell under 98, we can expect the lower digits, but it's very unlikely. And with the higher risk in the market and with the ongoing tensions across the board, across the globe, and also in the United States, we can say that for now, the dollar index will be most probably around this number of the 99, 98, 99, around these numbers, and even 100. This higher risk in the market increased the demand for the gold. That's why the gold demand is still high, and the price again moved above 4,000 after falling towards 3,870. What you can see in the chart that the gold moving above 50 moving average area, we can say still it's a positive in a bigger picture. For the week ahead, we expect to see the price around 4,000, not so high, not so down. Same thing for the silver, we can expect the same reaction for the silver as as for other markets, in the energy market, I have to mention about the energy market. The energy market generally, with the lower export and import into China, with the weaker expected, weaker PMI numbers, especially in manufacturing sector in the United States, we can say that oil price even thought that OPEC Plus decided not to increase the production from beginning 2026, but still the market is expecting more supply than demand, which is again putting pressure on the oil price, and generally oil price moving in a downtrend, and we are expecting the prices under $60 for the weekend. As for stock markets, we know that already the earnings, the most important companies, they publish their earnings, even thought more than 82% so far they could beat the expectations. The bigger in a bigger picture, the numbers, they were just like not such a good compared with the previous years, and the market somehow losing its momentum. Now we don't have too many market movers unless if there is something happen like the government opens, can give some positive reaction to the markets. And also if just like bigger agreements, trade agreements can move the market. But without these market movers, generally the stock market is under pressure and can continue further this trend. It's the same for the Nasdaq, it's the same for the S&P 500, Dow Jones, and all markets. As for the cryptocurrency, the same almost trend of the stock markets can continue in the crypto market as well. With the moving under main moving average lines, we can say that the crypto is still the negative in a bigger picture, especially as long as it's trading under 106 and 102,000 US dollar. If the price falls under 100 psychological level, we can expect much lower digits for that. Recovering back about 102,000 can hold these current levels and put some eyes and a bit higher digits in the radars, and that will depend on the stock market's movement as well. If we have the very good movements in the stock market, especially in the Nasdaq chart, probably it can move or it can move this cryptocurrency market as well. Otherwise, the bigger picture and the general picture is still downtrend. That was what happened the previous week and what we're expecting for the week ahead. Hope it was useful for you. Talk to you again next days. Have a good day. Bye-bye.